Investors and traders, welcome to the channel Market Chart Pattern. Today is 5th of June 2024. Hope everyone is having a great day. In this video, we'll be taking a look at the key US markets. We'll start by taking a look at our timing model. Then we'll take a look at the US dollar. Then we'll take a look at the US debt markets through the eyes of the US Treasury bond futures. So we'll take a look at the shorter term 2-year Treasury notes. And then on the longer term, we'll take a look at the TLT and also the long bond futures, which is the 30-year duration bond futures for the Treasury bond. And then we will have a brief look at silver and gold. And then we will begin to take a deep dive into the US stock indices. And it's been a fantastic day today because S&P 500 made a new high. As always, this video is for educational purposes only and it's not a financial advice. So just a reminder of our timing model, and what we were looking at was a key date to come in last week. So we had a time window for the 29th of May when we were looking for the correction to end, and the way the timing works is we have to give 2 to 3 trading days either side. So last Friday was a really important day, and what we have seen is actually markets go and make new highs, such as S&P 500. Dow Jones, this is the cash index, and you can see that this market is doing something a little bit different. It is much weaker compared to some of the other indices, and I believe the kind of correction we have had, which is some of the new indices actually making new highs and Dow Jones not doing that, is because there's some underlying rotation going on. So it's of rotational nature. All right, so now we'll before we move on and take a look at the US dollar, just want to bring this macro view that we were following for the summer of 2024. And we are looking for the US dollar to be lower, and we are looking for US yields to be lower as well, and metals to be which is mostly precious metals, neutral to higher, and this sort of combination of lower dollar and lower yields for the US market should be good for the risky assets stocks. And overall, commodities to softs and grains and neutral to higher, just on the back of the weaker dollar. However, what we have seen thus far is actually some of these commodities such as crude oil, grains, they have actually been moving lower recently in the last few weeks. Okay, so let's take a look at the US dollar index. So this is the daily chart for the US dollar index, and as you know, subscribers who have been following the channel, this 107 level here, in our opinion, it's 107 level around here is a pretty important high, and we tried to do another retest of these high, but we have failed so far. And looks like US dollar wants to move lower, and where it is at the moment is it's a bit of a critical point, because it has moved in terms of this kind of correction it had done before, and after that it's just trading sideways for past few days. And I believe on the weekly chart it was actually also finding support from the 20-week period moving average, and also the 89 is around there as well. But I think but also on the daily, actually the scenario is a little bit changing and there's more weakness coming into this. However, past 2 weeks have been positive for the dollar, so dollar is a little bit stronger, and where it is right from a structural perspective right here, once it begins to move lower, breaking the 103.95 level on a closing daily basis, then the chances for this to move lower in a rather rapid fashion increase. So we think that this pattern formation ABCD, which could have seen the dollar move as high as a 106.85, but it failed right into reaching this into gap, filling this gap on the 1st of May, looking for weaker dollar actually. On the flip side, this analysis will be negated if the dollar actually begins to close above 107, but it'll have to do quite a lot of work for that to take place in order to move that high. And one of the other things is this pattern that we were watching that failed to materialize. So I'm going to remove that. That was actually also going to be a bearish pattern, in fact. So this is what we're looking at in US dollar, really testing the 103.95, some structural support coming around here, and also the bearish symmetry concept is in here. Once it breaks that, boom, I think the dollar is going to go lower. Now, something really interesting happened in the treasury notes. So let's move to the 2-year treasury note market. And here, just want to reiterate that what we are looking for is that we think that this market is, the yields are on the right hand side here. It has formed a head and shoulder pattern here with left shoulder, head and right shoulder. And the market tested is 78.6% of this swing high. It has failed, in my opinion at least. And then it's ABCD formation here as well, so pretty strong pattern formation. Now what we are really, and we have seen, there was strength coming in the yields, and as of 29th of May, that's pretty much when our timing model was coming into play as well. The yields on this shorter term 2-year treasury note, they have actually moved lower a lot. And now we have some support coming in from the structure and also the 38.2% retracement around 4.7. If the market is able to close lower, we would like to see ideally two closing pattern formations or candles below the 4.7. And then I think we are actually moving in this black ABCD, which could in fact see this the yields on the 2-year move as low as 3.9%. So this is what we are actually looking for, 3.9%. Okay, now if we take a look at the longer end of the curve, so the long bond futures, something really interesting happened today. And we can see that over the course of last few trading days, in fact last week, starting from 30th of May, this market, there's a rally going on in this market. So it's moving higher, and this is something which we were expecting, and we had marked this as point C here, but we were waiting for some confirmation because we had a nice move higher and then it just kind of collapsed back right into it. And we were waiting for this bearish symmetry to be broken. So every time the market had rallied this much, sellers came in, and this is exactly what happened as well. But now that seems to have broken, and we have like a higher pattern formation like this. We think we are in this ABCD, and the point is 120. So 120 is most likely where this market is going now. But the other interesting thing is that the price is consistently closing above the 20-period moving average, and price is also above the 200-day moving average and also above 89-period moving average. So momentum is also improving, and I think over the course of few trading days, the 20-period moving averages cross over 200-day moving average, which will further strengthen that. The other thing is that we have drawn this nice channel formation here. So the market has actually closed above that, and also above 118.22 level. So that's fairly positive for this market, which brings us to the point that now I believe we are actually in an ABCD formation higher, shown in this red formation, and this market could go as high as 131, and over 131 could be a pretty strong resistance. It will also be right here where we have previous highs as well, coming in from April of 2023, and so it could be a pretty nice rally in bonds, and which could in fact should be good for stocks. But it is in an overall context of a bear market, so the interest rates going higher longer term. But we will see a lot of things once the market gets there, whether it's able to take these highs out and what the price action will be. But for now, this ABCD pattern is something that we have been watching for a while, and it looks like now we are finally moving in this CD leg higher to 131. Okay, now let's take a look at the TLT. This is the 20+ year duration treasury bond, and here we were looking for this 92.40, and the market has finally broken above 92.40. So that's again a pretty good price action, breaking above this channel, breaking above this bearish symmetry, and we just clone this, bring it around here. So just like the 30-year bond futures chart, I think 94.20 is where this market is going per this ABCD formation here. So a fair amount of development in the treasury note and bond market. Finally, I think we are seeing the kind of price action that we were anticipating for quite some time. Let's take a look at gold. So this is daily chart of gold, and this is COMEX gold. And if you are actually looking at spot gold, your prices are going to be different. So just want to warn you about that. This is the paper which is traded on the futures. So it's the COMEX gold. And here the gold has been in a trading range for quite some time now. We had some pretty sharp decline, pretty ugly looking price action, to be honest. And then it went right to the 78.6% retracement of this low to the high here. And this is where we had the timing coming in last week as well. So 24th of May and then 30th of May. That was the time period that we were looking for. And what is constructive about this is that the price has not moved below the 78.6% retracement. It hasn't gone up that much either as well. So this trading range needs to be resolved, and it could actually remain range bound for quite some time. Now, very interesting thing is that today the gold was higher and the yields were lower, but the US dollar was actually more stable, but the gold was still able to rally. So that's really interesting what is happening here. So we have another date coming in around 13th of June, 14th of June, excuse me. So I'm expecting the gold range to resolve either way, but the higher chances are that we are actually going higher, resuming this uptrend. And then on the longer term charts, we have a higher target as high as 2700 on the gold. Okay, now we'll begin to take a look at the US key stock indices. So let's start by taking a look at the cash market of S&P 500. Here we go. This is daily chart, and look what a fantastic looking candle here. The day open, or the regular trading sessions opened with a gap higher, and it just continued to move higher throughout the day. And where did it go? Right to this 1.272 expansion of this swing high to low. And here we have a number of levels on the daily chart that we have been watching. Let me squeeze this a little bit so it's easier to see. Here we go. So it's right there, 1.272, 53.90, and on the daily chart as high as 54.60 as well. This is what we'll be watching. Now the interesting thing is that Friday 31st was a pretty good low which came in. Our timing model was telling us in terms of the timing, and then from a price action perspective, this really is really important that we had timing coming in, and then we had the price moving into a key Fibonacci support level, which is 38.2% retracement. So in strong trending markets, 38.2% retracement is really key, because finding support from 38.2% retracement, it suggests the trend is strong. So an ABCD just could see us moving much higher. So for now, shorter term, just watch till 54.60. These are the kind of levels that we'll be taking a look at. And on the weekly chart, on the cash market, 56.50 is, I think this is where the market is gonna go, and we could have the other ABCDs as well. And now moving into the futures market, so let's take a look at the S&P 500 E-mini futures. And one of the things to note is that the futures, they have not taken the high out of 23rd of May. So the high was 53.68 and a quarter, and this is 53.68 and a quarter. So 53.68 and a quarter, and today also 53.68 and a quarter. So equal highs. So if had it gone up just by one tick, that would have made a new high in the futures, but in the cash it did that. Regardless, shorter term targets on the futures market, 54.39, 55.68 is what we are looking at. And we could have this ABCD, which I've not drawn here. Actually, let's try to do that right here. So here, and project it from here. So yeah, once it get to 55.70, 55.68, 55.98, that's the kind of region we are looking at on the daily chart. A quick glance on the weekly chart. 54.36, and I believe this 55.70 is gonna be pretty strong one, because we have 1.618 expansion of this entire 2022 bear market. And then yeah, so it's gonna be interesting once we get to that level. Okay, and now let's take a look at the NDX. So this is NASDAQ 100 cash index, and wow, what a strong looking bar it is. NASDAQ is leading. NASDAQ is very strong. S&P 500 is strong as well. So in fact, we had already drawn this ABCD here. Shorter term, of course, we blasted through the 18,870, 19,386 is what we are looking at, and possibly even higher. And on the yeah, let's actually take a look at the futures chart now. Yeah, let's take futures, then we'll take a look at the QQQQ. Okay, here we go. Now in the futures, this has also made a newer high, so higher high, so all-time new highs in the futures market as well for the NASDAQ 100 futures NQ. So this is slightly different to ES E-mini, where equal highs. So, but the cash SPX made a new high. So you know, the markets are really interesting with that perspective. It's reaching 19,123, which is gonna be you know, a target to look at. Maybe it also provides a bit of a resistance, something minor. We'll wait and see. But with this kind of strong looking bar, the chances are we just blast through it, but we'll have to still look at this level. And then the following that, 19,665 will be 1.618 expansion of this swing, and the ABCD is a little bit higher. Really interesting, really key levels. Just to reiterate that on the weekly charts, here we go. Quite a while ago, we had come up with this 20,825. That is the 1.618 expansion of this entire bear market of 2022. And here we also have this bigger ABCD completing. I think I should make these lines bolder so they are easier to see. Here we go. Here we go. So 20,800 roughly is gonna be you know, 20,800, 20,700 in that ballpark figure. In my opinion, it's gonna be a pretty strong, could be a strong resistance level, but the way this market is actually moving, it'll be interesting what sort of price action we might get. We might actually get some sort of a pullback. It could be a few days, it could be something like this. That is also possible. But we will have a completed ABCD pattern. Now this ABCD is going all the way, I shouldn't have moved this, all the way back to March of 2020. So it'll be really interesting once we get there, what sort of price action we get. And of course, there is a chance that this bigger ABCD might be extending. In you know, strong bull markets, that tends to happen. And then we could have another ABCD where we already had an ABCD, which is pointing us to 19,400. We could another ABCD, which could in fact see us moving higher as well. So there we go. Let me actually draw this ABCD, which I haven't drawn here, like this. And we just project it from here. Yeah, so I believe this 19,700 is the kind of target we can look for, where we might get maybe you know, a slight pullback or maybe some sort of consolidation here. And of course the bigger numbers there. These are per the weekly charts. Okay, now let's take a look at the QQQ, going back to the daily chart. So this is the daily chart of Invesco QQQ Trust Series. Fantastic looking bar. I think we are going to 471, which is the 1.618 expansion. These are shorter term targets, by the way. So really interesting information what is taking place here. Now let's take a look at the YM Dow Jones cash index. We already took a look at. So here we go. This index is doing something very, very different. You have seen a NASDAQ 100 making new highs, new all-time highs. S&P 500 cash did the same. Futures, they made, well, it's very close. So what's happening here? It's just big trading range. This is what it is. It's a really massive trading range, 40,400, and the bottom came in 37,481. So likely, well, as long as this 78.6% retracement is intact around 38,000 level, the chances are we will actually break this trading range to the upside with targets 41,170 to 42,178. And of course there is a possibility of this kind of one-to-one price projection like this, yeah, which will, which is a little shy of the 41,170. So this is most probably the kind of direction this index will take, but it could go on in this kind of trading range for quite some time. And it's in my perspective is that we are going a rotational procedure where depending upon the environment that we are in is likely to change because of the perception of the interest rates. So if Fed embarks a cycle where they will be looking to actually lower the interest rates, then of course just by doing one or two, the cycle will start. So I don't think they will be abrupt where they do one thing and then don't do another thing, because the central banks are very conservative and they want to give a consistent kind of a message, in my opinion, out to the marketplace. So once the cycle starts, it starts and adjusting to an environment where even if it's going to be shorter term, and shorter term could be 6 months, 1 year, whatever, that the rates are going to be lower, then the investors might prefer certain kind of stocks like growth stocks, for example, or so they might rotate out of certain stocks, start to move into some specific kind of stocks. And this is the kind of thing which we see when we take a look at these different indices. Some of them are doing something different to other ones. Dow Jones happens to be that sort of an example. While we are at it, let's take a look at the Dow Jones transporters. And transporters also did okay, and they have picked up a little bit, so that's also interesting to see, but they remain really range bound. Now last but not least, Russell 2000 small caps, it also did better today. And look, you can see that this is the kind of our bottom of the range here. So the market is actually respecting this. We were looking for this market to come as low as 20,012. Don't think that will happen with the kind of strength that we see in the S&P 500 and the NASDAQ. So yeah, it's finding support here. So I think it should also begin to get more price action to the upside. If it just begins to reject lower price, from this point, 20,035. So it looks pretty interesting. And if we just take a look at IWM, and we can see that the cash market was stronger here, so found support here, reject that lower price. So we'll just keep on watching this one. Now, really interesting, we'll also take a look at the New York Stock Exchange Composite Index. And this one on a pullback, finding support from the trend line, the 61.8% retracement, and I believe we are actually gonna go and take these highs out. But look, this one, price action a little bit similar to the Dow Jones. So it also has like foreign stocks as well, has ADRs. But it's showing a sign of strength as well, because it's holding 61.8% retracement and this trend line. So the chances are it's gonna go and actually, in fact, we can see this 1.272 target and then following 1.618 target could also be met. So we'll have to wait and see, but looks like the chances are it is moving higher. It is holding support trend line, 61.8% retracement. So this is the development. So again, the key thing is, the key message is that the timing that we were watching and those 38.2% retracement levels in the weekend review, we looked at that 38.2% retracement, it came in so many markets. So that was telling us that that is a pretty strong level to watch as a possible support, and the price action thus far has been good today. This week we also have some other economic data coming out, and I believe the non-farm payroll are also coming out on Friday. So we'll get a lot of economic data out of the way this week, and which should give us a lot more clues what the market is likely to do. So thank you very much for watching the video. Apologies, a little bit longer video, but I did not do videos for the last couple of days. Apologies, I wasn't feeling that great. Much better now. So thank you very much for watching the video. Good luck, good trading. If you like our video and analysis, please do subscribe to the channel and also like the video. Speak to you guys soon. Bye.